Good afternoon, everybody. It's Monday, March the 20th. It's about 12 p.m. Central Standard Time, around lunchtime, and we're going to talk about Bitcoin. So here's the breakout. Congratulations, everybody, if you played this breakout. So it was very crucial. Well, first of all, make sure you guys upvote this content if you guys are liking the way that I'm presenting my videos. I'm trying to present, like, I definitely talk about my bias, right? I want to be clear about that I took a tiny loss today, but in the grand scheme of things, to me, just because I'm bearish bias, right, in that particular situation, it doesn't mean that everybody should also be bearish bias, right? You have to make sure that we stick to our own opinions, right? Sure, I took a tiny loss. I believed it was going down, but of course, we're all going to believe different things. If you guys believe it's bullish, it's your risk, and you guys have to understand that, right? So I'm not going to apologize. I mean, if people got wrecked in the market for taking a risk, make sure you guys are sticking to your stop losses. These things are very crucial to your development as a trader. If we don't understand that that's what stop losses are for, and that we have to take risk all the time, that you know, you might not excel to the next level of trading that you want to be at. And I just want to go over my steemit, right? I want to go over my steemit, and I mentioned specifically that 87.14 was a massive resistance. A key break above this resistance with volume can rally to up to 89.50. We didn't get quite there yet, but there might be one more small subwave up. And I specifically mentioned that anywhere between these regions here was basically a no trade zone. Anywhere above 85.50 and about 8,700, right? But of course, it's your risk, guys. You can enter if you choose to. It's completely up to you. But just please understand that without risk, there's no reward, right? We have to take risk at all times. Otherwise, the possibility of reward is entirely off the table. So the way it's going right now, it looks like there's one more small subwave up, and then there might be a correction. So let's get into this. So the reason why I mentioned it looked like a bearish bias was just simply because of Elliott wave count. And Elliott wave count can dictate a lot of things sometimes. So now we're just going to have to modify our count. Simple as that, okay? The way that we would probably end up seeing this is probably subwaves 1, 2, 3, 4, and 5 going up simply like that. That seems to make a lot of sense in my opinion. If this doesn't make sense right here, then perhaps, and oh yeah, I forgot to say that this is most likely some sort of ABC structure right in there, right? Perhaps even an ABCDE, where we ended up breaking out from this specific structure right there. A, B, C, D, and the very final touch right around there. So this seems to make a lot of sense as well if we were to count this as our bullish wave. So this could have been wave 1, this could have been wave 2, and now we're basically starting our impulse wave 3. If that's not the count right there, another possible count could be this one. Let's say this was wave 1, that's 2, that's 3, that's 4, and that's 5. This right here was basically ABC, okay? We'll say something like that right there. Now this point right here will actually offer a massive resistance or support now, which is a very good thing. And then this could have been part of a subwave 1, that could have been subwave 2, and now we get a 3, of course, going upwards, something like that. Just to give you guys an example, not those specific points, but just to give a very clear example of where we could actually get up to. So this seems to also make sense if we look at it from the perspective of Elliott wave, 1, 2, and 3, kind of like that, right? But regardless, guys, like, the lessons need to be learned, right? You guys cannot simply just follow blindly. Like, sure, I took a tiny loss, but you guys have to understand that to me, these losses are nothing, right? I don't play this market for the money whatsoever. But of course, if you guys are, I played like a game, right? I see it very differently. So to me, because I'm a more experienced trader in the market, it's important to understand that you guys got to stick to your stop losses. You got to stick to your specific risk to reward scenarios. Without sticking to these risk to reward scenarios, you guys might just end up getting destroyed in the market. And that's certainly not something that you want. You have to make sure that you know why you're entering, where your targets are, and your specific risk to reward ratio. The risk to reward ratio is what's going to keep you guys very safe. Without knowing your risk to reward ratio, you're pretty much entering very blindly, right? So these are a lot of lessons that need to be learned for you guys to progress to the next level of trading. So the way that I'm seeing this right now is definitely more bullish than bearish now. I've changed my bias. I've had very specific stop losses in mind, right? I got stopped out around, I think 86.50 or so. I took a very tiny loss to me. To other people, it might be a very big loss, right? So the way we should be seeing this now is simple. It made an ascending triangle. We could call it from multiple points, perhaps like this, just as an example, okay? Where these regions right here were basically bear traps, right? These are bear traps on the lower region. We look at it on this time frame, actually probably on the 2 hour. It seems to make sense, right? A huge green candle going upwards like that. So this could have acted as a very good support region. Now, there was a possibility of us breaking down, but I don't think we're going to see those particular ranges that I mentioned earlier by taking these Fibonacci levels right here. Now, excuse me, let's start to extrapolate where this could actually end up. So we see some massive cluster regions right around here, okay? Here it actually broke out. Next region is right around here, around the 89.50 range or so. So let's try to see where we could actually get our Fibonacci based on this specific structure right here and see if we're going to get resistance at the C structure. So what we're seeing is it's pretty much nailing the 618 target right here. Almost there, but not quite. So I do see resistance pretty much for this structure here around there. If we take it from another target around up here, what we see is the next target as well is a 382 level. So right around the 89.50 range is where we're going to meet a lot of resistance naturally. Also, if we take our previous target over here, or not target, this cluster region right here, we're definitely seeing some sort of resistance being offered, right? If you guys take a look right around here as well. Definitely a lot of resistance there around the 8800, 8850 range. We just simply cannot break above 8850 right now, which is very understandable. Now let's see if we can actually form some sort of channel as well. Channels are always important to consider, right? Let's see, yeah, sure, we'll draw it like that. So let's say we actually drew it up like that. Okay, well now we're seeing a lot of resistance there as well, right? Oops, I should have cloned that properly. When we draw it like that, notice how you guys are seeing the channel. Let me actually draw it a lot more clear with different annotation here, or different tools. So let's say I drew it right across, something like that. Sure, we'll just draw on the lower end to make it very easy here. So let's say I drew with my channel tool from right around here to right around here, okay? And I drew it downwards like that. That's pretty much exactly where the resistance is if we go from wick to wick, right? If we go from body to body, it's pretty much the exact same thing as well. So what I need to make very clear, guys, was that it was a no trade zone, okay? Around 8850, 8600, under 8700. Of course, it would have made a lot of sense. And I mentioned in my video that this could have been a very reasonable risk to reward if we broke above it, right? Targeting around the 8950 range. So if we broke above right around here, it would have been good to go for a target of pretty much right where we are. We'll say about 8900, okay? And then your stop loss would have been set slightly below here, and that was a great risk to reward that I was mentioning in the video of about, you know, of about 3 to 1 for a very quick day trade, 3% scalp position, right? So the way that we're looking at this now is definitely there's resistance between 8850 and 89, basically under 9,000, right? Right near the 9,000 mark, more specifically 8850 range. So now what I'm going to wait to do is, actually let's look at the daily first of all. So the daily candle is looking very bullish, right? Incredibly bullish, I have to admit that now. Volume is probably going to end up picking up a little bit as well. We're bouncing off of the 21 EMA. Now, have we officially crossed over in a daily yet? Let's take a look. Not quite yet, but it looks like the daily does want to cross over maybe in a day or two. 12-hour chart, right? We actually ended up getting a hanging man candle, which was completely shot down. But the volume is actually decent. I mean, we've got 6 hours to go, but we're still trending downwards like that a little bit in terms of volume. Perhaps one more correction and we'll actually get, if we break outside of that channel, that would be great. But there's a very likely chance we're going to hit the bottom of that channel before trending up. Before we were leveling off here, right? We were leveling and we were actually down ticking, which made it look bearish, guys. We have to understand that. Now we are actually trending right at the 55 EMA, which looks like it's about to reject it. I can't see it getting above 8850 or 8900 and closing above it, not till a slight correction. but actually the 6-hour chart, we could possibly see a sandwich in between here, right? So we'll talk about where possible corrections could happen. If we look on the 4-hour chart, we were meeting this cluster of resistances that simply could not break out of it, right? We could not break out of it. So now, finally broke out of it. Now we've got a chance to close above it. What would be really ideal if we actually got, you know, let's just say that was a candle and it would reject it down at the 55 EMA. So the 55 EMA, right, if we reject it like that, that would be beautiful, because then it shows that the bears have tried to take some profit, or shorts, maybe they were entered, and then it just simply didn't work out, right? Then the bulls end up rejecting them to the downside. So there's a lot of key things to be looking for right now to enter, and we're going to go over all that. So on the 3-hour chart, we're facing the body of the candle at the 100 EMA. Didn't quite break through. This candle was actually signaling more of a bearish candle, right? Bearish spinning top here. Now we look at the lagging a little bit 2-hour chart. It actually looked like it was going to cross over. It was going to cross over to the negative side, but simply could not. So you guys really need to understand. A lot of the people that follow me on Twitter said, you know, they got wrecked. Well, I mentioned basically all 4 scenarios that you could have gone in, right? So if you, like, we're just going to go over it very quickly again. So the 4 scenarios were basically assuming that this was a cluster of resistances there, okay? Let's say that this was trending upwards. Well, the scenarios that you guys should have played to stay safe is you could have played the breakout, okay? If you guys actually entered a long position here, great, okay? You entered a long position somewhere there. Make sure you would have set your stop loss slightly low. You would have targeted around 8,900-ish, right? Really good risk to reward ratio up there. That's one play. Second play was to simply wait on the breakout and go for a very small gain. Let's say the breakout was somewhere there when you saw the volume. Great. Targeting the same place around 8,900, stop loss slightly below. That would have been a win-win scenario for both of those longs. Now, if you were in a short position, right, entering right here, this was the riskiest one, but to me, it was worth the risk. I basically stopped myself out around 86.50, no problem at all. And I would have targeted roughly 8,000 range, right? 8,000 range, really good risk to reward of about 3.78 to 1. This one was the more risky one to take, but it was also the more profitable one to take. Riskier in terms of percentage loss, right? And probability. And then the last scenario that you could have entered was simply going for a short if it broke downwards, which didn't happen, and then targeting around 8,000. This was the most ideal situation, but it didn't happen. So there was only one of 4 situations you could have went in, right? That was one of 4 situations you could have went in that was risky, and it was basically doing what I did, and sometimes, but it had the most possible gain. So to me, I don't mind at all admitting, guys, that I made a mistake, right? But I'm not going to say sorry for anyone who tries to blame me. That just absolutely makes no sense at all. So what we're seeing here on a 30-minute chart, right? So far, we still have about 21 minutes here. We're seeing a basically tweezer top right here. I do expect maybe one more uptrend or one more bounce to the upside, simply because it doesn't look like it's really done its uptrend yet, right? So this could be, for example, this could be the first impulse wave up right around here, okay? This could be the second. This could be, who knows? It looks like there's only 3 regardless. So it looks like it still has some ways to go up. This is a bear spinning top that's forming on the finish 15-minute chart already, right? This was kind of a hanging man. So, but regardless, we take a look right here, what we're seeing is there's still one more possible subwave going upwards. So despite my bias for being bear, I definitely respect the fact that uptrends can happen. And to me, guys, it's nothing but a game. We take these chances with probability, right? We talk about probability, we talk about possible things that could happen, and we simply just take chances. We're not always going to win every single trade, but we make sure we acknowledge that this is a game. Well, not a game to people like myself, but this is a game where we take risks. And I always say that without risk, there's simply no possibility of reward. If we look at it on a very micro time frame, I shouldn't even look on the 1-minute chart, but it's very clear that it looks like it wants to break out one more, right? To possibly one more wave going up, where we have an ascending triangle right there, okay? So as soon as it breaks above, say 80, this region right here, 88.50, I might even enter a very small scalp position if we actually get above that. So let's see if this even ends up holding, right? This has only been for the past 20 minutes. you know, but it may not even hold, right? What may end up happening instead is that we just get some sort of ABC correction coming to the downside, right? But it clearly is looking like it's holding thus far. So let's just chill here together, see what's going to happen, see if this is actually going to go on a slight uptrend or not. If it does, awesome. I'm going to get into a long position, a very small scalp, and then near the top there, I'll most likely end up shorting it. So we look on the 5-minute chart, we see a possible slight crossover, but the way the formation looks on the RSI is more like a bullish flag, right? I only see basically, actually, do I see any patterns going up here? No, I don't really see 5 waves going up yet. I see 3 subwaves only. So there's a really strong chance that we could possibly break to the upside for one more very small wave. We're definitely hammering at the top here. How many times can we hammer at the top until we break this, right? Especially with this bullish uptrend. So that's kind of my quick summary for this. I just feel bad that some people lost on the trade, right? Like, it's really difficult for me to sympathize, because we point out all these possible scenarios, right? The only reason why some people could be upset is because, well, you might not understand that this is a game of probability and we just take chances all the time, right? I've been posting some of my losses, like I tweeted my loss yesterday, both of them. Very small loss. I mean, how could I feel bad about a $300 loss when I made about 1.5K yesterday? So it's like, okay, I lost $300. Big whoop-diddy-do. I'm up like $1,500 net profit, right? I made 1.8, lost 3. I'm still up 1.5. No problem at all. We gotta make sure we understand that this is a war. And we don't care about this. We care about the small battles, but we try to win more of these battles than we lose over time. If we can keep this mentality of a winning trade, of a winner, I think that you guys are going to be much more profitable over time. So yes, in a way, I do feel bad that you guys lost on the trade if you went short simply because you saw my video, but I emphasize really strongly in my video, guys, that this is a risky trade with a very high gain, and you might not be able to control your emotions, for example, right? I bet you guys, some people are still holding their short positions right now, which is definitely not a good thing whatsoever. You don't want to be holding your short position right now, guys. Like, you should have cut your losses a while back. It's simply just not worth it to hold and hope. Holding and hoping just doesn't really work out well, guys. If you hold and you hope, what could easily end up happening is you can get burned, right? What if it doesn't correct even like that much? What if something completely goes against you? I need to strongly emphasize that to be a better trader, we have to make sure we understand how to cut our stop losses. We have to make sure we know how to protect our capital. We have to know how to protect our gains. We have to know how to preserve it. And once we know how to protect and preserve them, then we can actually grow them. So if you're holding on to your position right here, I'm not advising you guys to cut your losses or anything at all. It's not like that. But what I'm saying in general is that you need to always be conscientious of protecting your money. Now myself, I'm very protective of my money. The moment that but the moment that I see the market going against my direction, what I know right away is, Philicon, you need to cut your losses. And I cut it like a champ, guys, at 86.50. I will not take any unnecessary risk whatsoever. And you know what the worst part is? The worst part is, like, I know you guys have been in this situation because I've been in it as well, right? And it still happens to me to this day. So I just want to tell you guys some anecdotes that you can relate to. Let's say I cut my losses, right? I cut my losses, and let's say right now, if I were in a short position and I cut my losses at 86.50, and then all of a sudden, you know, it actually got back to my break-even price or a point where I could actually profit instead, I would say to myself, like how you guys would say as well, damn it, I should have held my position. You guys know what I'm saying? Or if you went into a long position, just as an example, right? And then the market actually ended up going against you, right? The market goes against you and it goes down instead, but later it rebounds to the point where you either break even or you actually are in really big profit, right? And then you say to yourself, darn, I should have actually held my position there. Do you guys get what I'm saying? That's a really bad mentality to have. It still happens to me where I said, if I say more as a joke to myself, where like, oh, if I held my position, I would have broken even. But I know, as an experienced trader who's been doing this for a while now, I know with certainty that that's a really bad mentality to have. but I still think it, right? It doesn't mean it actually affects me or makes me feel bad in any way, right? But it still will cross my mind, right? But it crosses my mind because I try to figure out what I could do differently as well. So that's a really bad mentality to have. Just because let's say that the market didn't recover, right? Let's say it kept going against your bias and you held, right? So if you went long and then you cut your losses, but later you find out that, oh wow, it actually bounced back to my price to break even or to go into big profit, right? But let's say that it didn't do that. Get what I'm saying? If it doesn't do that and it goes completely against you anyways, well, it's going to be really bad. So if you start thinking to yourself that, oh, I should have actually just held my position to break even or make profit, well, we get into this mentality of wanting to hold over time. And if you're a day trader or a swing trader, that will be the death of your career, guys, if that actually happens, okay? So I just need to be very clear that we need to adopt this winning mentality. You got to be a winner and you got to know how to protect your capital. You got to know how to preserve these gains. You got to know how to make sure that you don't throw your money away and ride these losses until you break even. Because day traders, guys, we focus on very strict discipline. We want to have the discipline of a monk. We want to be able to cut our losses very quickly, and we want to focus on winning the marathon over time rather than just focusing on the very small sprints. Because the small sprints, they really don't matter, guys, in the grand scheme of things. Like, to give you guys an example of yesterday, right, when I was telling you about my profits versus my losses. So let's just finish up this technical analysis. By the way, I bring a lot of psychology into my trading as well. We have to understand that we are humans, and as humans, the psychological and the emotional aspect of trading is very vital and key to your success. If you cannot control your discipline, if you don't, day traders require a lot of discipline, guys. You gotta stick to your stop loss. If you don't stick to your stop loss, this is exactly what's going to happen. You will get burned in the market. You will end up holding when you shouldn't hold. Now, swing traders are a little bit different because they can dollar cost average over time by managing it, right? But for day traders, you don't want to be riding these massive profits. You got to know how to stick to your risk to reward scenario. So every single trade, guys, try to focus on writing your risk to reward, right? Write it down on a piece of paper, get a pen and a notebook, write down your specific play. And if you guys actually end up not being profitable, make sure that you are going over it in high detail so you can reevaluate what you did right, what you did wrong. A good trader will always review their plays, whether it's a successful one or it's a loss, because with reviewing it, it's kind of like, you know, if you're an athlete or something, right? You'll want to watch a lot of other teams play. You'll want to watch yourself play again, because then you can review the game. You can focus on your strengths. You can focus on your weaknesses, and you can rebound from it. So please don't ever think that these losses of your guys, they're bad things, right? We use them as a very valuable learning tool all the time. And when we get better at this, right? When you guys get better at this, I know for a fact that some of you guys are in that boat that I've been describing throughout this video. When you get better at managing your risk and managing your emotions, I kid you guys not, you'll be so much better at protecting your capital and growing it slowly over time, right? Myself right now, I don't worry. I don't even flinch, guys. I honestly don't even flinch when I take my losses. What I do to not feel bad is I literally just close my eyes and I click the X button. Yeah, I literally click the X button, right, and to close my mark to my position, and yeah, I'm cool with that. Just let it be a loss, and then I just move on. I focus on the next trade, and it's that simple sometimes over time. Okay. So we're getting a doji here at the top already, but the bulls look like they want to make one more last push up right now. If I go to another chart here, the 45-minute chart, we're slowly leveling off here, but it still looks like there's one more push upwards, guys, okay? On the 15-minute chart here, one more push up, as we can tell, right? So the bulls are getting ready to break the 88.50 range right here. Let's see how we're looking on the 5-minute chart here as well. Yeah, it's one more push up. I'd say no more than 9,000. No more than 9,000. And if this was indeed, like, you know, it's really difficult for me to do an Elliott wave count properly right now, right? Super difficult. I don't exactly know how this structure even is. So I stick by my decision of saying that could be, you know, wave 1 right here. This could be wave 2. this is going to be the first subwave of a very big wave going on. Let me just do it in better detail for you guys here. So we could be looking at some pretty high targets right now if this was actually the impulse wave going upwards, okay? If that was the impulse wave going up, like we could be looking over 10K, guys, like, you know, sometime down the road. Let's say that that actually gets to a very bullish level of the 161.8 level, we'll just say for this one, okay? Like we could be breaking, we'll actually take the average just to be much more consistent. Like if this is the first subwave upwards, okay, let me just explain it after this. Just to give you guys an example, like this could very well be, like we'll get to say 9K or something for this one, and then we end up uptrending, something like that, okay? That could very well be a viable scenario as well, right? You guys see what I mean? So this is kind of one of the plans that could very much so happen. So now I'm more so changing my bias from bearish to bullish, which is fine. Sometimes you have to have a radical change in events in the market for you to consider a different scenario. So you know what, guys, I will say it. I apologize for being wrong, but at the same time, I don't apologize, right? Because we are ultimately responsible for our own decisions, as we always know that. And other than that, we have to make sure we lay out the foundation for different possible paths. We lay out what makes more sense, what is the best play to take based on probability. Should I actually enter this trade, right? Do I know where my entries, my exits, and what my risk to reward is? If we can't answer a lot of these questions, it might not actually be worthwhile for you to enter a trade, because it could simply just be pure and blind luck if you were to actually profit from it. So I hope you guys have remained extremely cautious through this event, and if you guys have taken a loss, please understand that it's only going to make you better over time. Don't try, guys, to play very big positions at all. Always play for the learning experience first. If you play for the learning experience, right? If you play for the learning experience, you're just simply going to get a lot better over time. Play not to win, guys. Always play for the valuable lessons, because the valuable lessons, that is what's going to make you a better trader over time. So eat up those losses with, you know, with pride and humility, and know for a fact that the money that you might have lost because of a trade, it's only going to strengthen your character and your skills as a trader, right? So I hope you guys have made some good decisions. Yeah, if you guys entered this trade and you were successful, which I'm sure a lot of you guys have. I'm sure there's been a lot of successful traders out there, right? Awesome. If you guys have been doing very, very well and you actually entered above 87.13, there's still a very good chance that we're going to get to a very reasonable number right now, just based on how everything is extending and looking. We're just about to break the 88.20 range, in my opinion, and then we should see one more possible small up wave going upwards, okay? So other than that, guys, have yourselves a great day. I appreciate all the love and the support. Please make sure you upvote this on Steam. That would mean a lot to me. If you guys have killed it in the market lately, you guys are welcome to buy me a coffee or just a lunch, but don't ever go overboard with your donations, okay? Other than that, have yourselves a great day, and thank you very much for keeping up to date with my videos. Bye now.